Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Friday, the 18th of January. The week ended a lot like it began. Bulls in control. Pretty much ran this week for the Bulls. So definitely a strong performance. All of our sectors were up today. All of the indexes were up, and metals were down. The gold, silver, they finally kind of fell through those little floors and did a little bit of selling. But from an equity point of view, pretty much it was hard to do poorly today overall in the market. Netflix did kind of not get the greatest response to their earnings. Nothing super dramatic, down around 4% or so on the day. But most of all, the earnings were okay, for the most part. There were quite a few that reported, and it seemed like more hits than misses, maybe a good way to put it. So, and understandable, Marie, understandable. It has been a very bullish rally, and it's been an interesting one to watch. Just because we've mentioned it before, kind of step by step, just kind of knocking out one challenge at a time. It's not been impressive so much in the sense that, boom, there we go. It's just take out resistance here, take out resistance there. And, we're not seeing any signs yet of it stopping. So good afternoon, Tanner and Andy and Lorena. Everybody, it's always great to see you guys. Hope you had a good day trading. And maybe some management going on bear calls right now with the Bulls in control. Still lots of earnings to look forward to as we work our way through this earnings season. Going into next week, we've got around 70 S&P companies, S&P 500 companies. Some pretty big names: Johnson & Johnson, Procter & Gamble, Intel, Comcast, AbbVie, Union Pacific, IBM. So we've got plenty ahead of us before we're done with earnings. But, as we kind of wrap up the first, week of earnings, at least in my mind, it's been more positive than negative, in beating earnings. We've seen some revenue misses. We kind of tapered off on, kind of adjusting our forecast to the downside a little bit, at least this week. So it should be interesting to see where these next couple of weeks take us from an earning perspective. As we kind of shift into our indexes, the Bulls really, were in control in the after hours market. We gapped up on the open, and really they kind of held steady all day long. We saw a little bit of intraday pullback develop. Second half of the day, really spent the second half of the day relatively flat, but really no bearish activity from a broad market perspective here today. So we closed strong. We really did, clearly taking out some levels. Not a lot of overhead above us is the thing. We've kind of taken out lots of levels, and we still have more to deal with. But as we kind of look at the S&P 500, we have a little bit of history kind of where we're at right now. But that is, in my opinion, at least a minor level to look at, but not a major level of resistance to be overly concerned about. Really, there's just not much, serious resistance, at least to my eyes, until we work back up to these highs in that 28 range. And it seems weird to say it. And, while it's been doing it, I don't expect it to go straight up to that price point, even though that's kind of the march that it has been on. We've taken out resistance. We've caught the 9. Our 20 has started to flip back to the upside. We've broken close to 50 yesterday. I'll be watching my short-term average, which, as you guys know, I like to use the 9 exponential EMA, just like Coach Mark does, as my short-term average, kind of to guide me as kind of that first level of support, if and when. You would assume at some point we'll see a pullback. So if and when we get one, that will be a kind of a level of support. But we might be seeing that short-term average, whether it's a 9 EMA, a 10 simple, crossing above that 50, giving us yet another little buy signal in the very near future. So hasn't happened yet on the S&P, but again, just another step for the Bulls here today. And good afternoon, Zach. Great to see you, my friend. Hope you had a great day in and out of the market. Very similar over in the NASDAQ. We're working to what is, a level where we've seen some price action. at around 6,900. Not a major level, at least in my personal opinion, but we have seen some price action there. That moderate level notwithstanding, we've got the flat 200, we've got those previous highs, and again, there's just not much in the way. And so while who knows what the future holds, I always think if you can break resistance, why don't we go to the next level? If you break support, why don't we go to the next level? And that's just the way my brain always works, for better or worse. And so we still have even more room, before we run into, a moderate challenge in the 6,900 range in my mind on the NASDAQ. And then, little things, the flat 200, ultimately these highs that really caused us some trouble in days gone by. But again, just like yesterday, I think you just have to be a little bit more bullish in your posturing with what you've seen here today. Overall, Dow Jones, very similar. A little bit of history, not too far away from where we are at, around that 24.9-ish area. Not a major level, but a previous support zone, albeit briefly. It's not a lot in the way beyond that, and that's kind of a common theme. I probably like the Russell best from a pure index point of view. As a bull, there's not that stuff. Those levels that we're looking at on those other indexes, I mean, we're all going to have to make up our own minds whether or not we think they're worth noting, major or minor levels of potential resistance. But over in the Russell, I mean, there's just not much. There's not a lot in the way until we work into those challenge areas. So we still have some room to drift to the upside over in the Russell as well. We're not seeing, really across the board, from a market point of view, at least I'm not seeing any sell signals being generated just yet, and so I'll continue to say, hey, you keep beating these challenges one at a time. I'll keep getting a little bit more on board with you bulls each step of the way. Not super bullish in the first steps. Should have been in hindsight. Wish when we first started to break resistance last week, I would have said, "Yep, there we go." But that's not the way I do it. I don't think it's the way that you guys do it. I don't think it's the way we should do it. It's just the way we should have done it this time, with the benefit of hindsight, right? But we're still seeing some bullish signals throughout the market, no doubt about that. Of course, on a day like today, where really the bulls kind of ran it from top to bottom, gapped up on the open. We're going to see strong movement in the sectors as well. We kind of gapped right into that trend line on the open in the materials sector. Go in and look at it, say a 15-minute time frame. Really kind of didn't take off. We kind of saw that the S&P was able to move pretty quickly right off of that gap on the open. It took us about an hour over in the material sector, hanging out right at that resistance line. I would imagine traders were kind of doing the same thing I was doing. What do I do about this? So let's wait and see before we ultimately did push through, showed pretty solid movement, just like we did in the overall market. From there, clearly, in my opinion at least, clearly closing above that trend line, which, again, as we talked before, kind of lined up with that old support zone. I will personally be bullish on the materials sector as long as we're above this 53 support zone and this trend line. I like the room, not really any major challenges until we get into the low to mid 55s. And again, on the ETF, that might not be a ton. It's a couple dollars. It's nothing maybe to scoff at. But when we kind of look at individual stocks, they might have a little more room to work individually. So I expect to like this sector quite a bit early next week from a bullish point of view. As long as we're holding this 53, and I'm going to call it 53, that puts me at that trend line. That puts me on, north of this old support zone. I'm going to be, basically bullish in this sector, looking at through those eyes personally. Over in energy, we finally were able to, push through, and we watched it for over a week, fight at that 62, fight at that old support zone. Sooner or later, someone's going to win, and it looks like, at least short term, we got to give the victory to the bulls. We did, kind of pierce that yesterday. I wasn't ready to call it a breakout personally with yesterday's price action, but I am ready to call that here today. Really, I think as long as we're above 62, or probably more appropriately now, the lows that we set up here at around 61 and a quarter on the, when we were kind of consolidating. I think you have to be, again, a little on the bullish side over in the sector. I'm still not loving it. There's still lots of overhead in those, but there's lots of opportunity in them too. No doubt about it. So again, a little bit to work, not a lot of resistance ahead of us for a couple more dollars. Then we'll start to work into what was we have some serious history. We spent throughout the course of 2018, probably about 4.5 months using that 65-ish as a support zone. We bounced off of it many, many times. I will be looking at that as a pretty respectable level of resistance personally. There is some room between here and there, but as we work into that floor, right or wrong, for better or worse, I'm going to be saying, yeah, that's where I'm going to stop short term, at least being bullish. Won't necessarily go bearish, will depend on the signals. I guess we'll see them together. But if we get into that range, it's gonna catch my eye. It is, and I spent every single one of those days over those 4.5 months looking at this ETF and watching it do that. I remember, and I imagine other folks do as well. A little more room over there to continue to move forward as well. In our financials, really, they've had a great week. It was a good week in the market. Financials really ran it. They broke early. We've had earnings, and yes, while there were some misses, there were definitely some hits out there as well. We easily worked through easily, maybe not, but we worked through 24 to 25 pretty easily. We worked from 25 to 26 to where we kind of closed here today very easily. And yeah, we kind of piggybacked on good earnings to do that, but we're here regardless. A little bit of support, old support, kind of right at that 26 where we called it a day here today. I do think that is worth monitoring as a potential profit-taking or resistance zone. Not necessarily a brick wall, but certainly something to keep an eye on. But again, kind of like so many other areas, whatever we kind of personally think about that, beyond that, there's just not a lot of overhead. We do have something here at this 2640 or thereabouts that we do have lots of history at. As you can kind of see here, it was kind of we tested, broke. So, time-wise, we spent some time in that 2620 range. Will definitely be worth keeping an eye on if and when we get to that price. But other than that, this little, old floor that we're hanging out right now, not a lot of overhead in the financial sector. A lot of good earnings from the banks, or at least decent earnings from the banks. And it seems like overall it's been a positive experience, earnings experience for them. Continue to overall like it personally. We'll have to work through these small challenges, but we've been up to the task, so far. And good afternoon, Whitney. Good to see you, my friend. Hope you had a great day, both, in the market and out of it, and not getting snowed on. It's actually melting out here today. We kind of had 2 days in a row of nonstop snow, and now the sun came out to do a little bit of melting. It was good to see him. So again, kind of carrying on really the same conversation. Industrials chipping away at those levels. We are at, again, another short-term floor. We have had some price action here in the industrials. We do have some industrial earnings coming out, but not a whole lot ahead of us. This little zone, and again, I think it's worth respecting. I'll always feel that way. I won't always be right, but I'll always feel that way. We've seen price action here, significant price action here before. If we can push through this, though, there's really nothing until we approach that 200-day moving average. This is an area that I'll be very interested in as a potential bull, probably as I go into next week, I would suspect. I didn't find as many watch list candidates as I wanted. A lot of it was earnings, and I like that chart, but earnings are next week or early the next. And so I could see the ETF being an appealing vehicle for me, who I don't like to hold through earnings unless it's of course, an earnings specific trade. I might be interested in the ETF personally if we can push through that. I do like the room that we have to work potentially if we can take out this last challenge here. So again, I don't want to sound as bullish as I know I sound. I am a cautious guy, and you guys know that. But it's just, we just keep seeing more and more and more bullish signals. And so it's really hard to make strong bearish cases, in my opinion, right now, pretty much across the board. We're just seeing buy signals, and where are the sell signals? At least for what I use, I'm just not seeing them personally. I'm not some crazy, it's going to the top, get in while the getting's good, but everything's showing me bullish signals, so I have to kind of proceed that way. Trust my eyes and not my brain, right? My brain can lead me astray, and it has before. Over in technology, working through that trend line, I think we can clearly say that we did take out that trend line here today. I know that's how I'm looking at it, at a little bit of a floor. If we can push through that, again, an area where we saw there's room to run in the NASDAQ potentially before we run into levels of resistance. Really similar situation over in the technology sector. Still lots of earnings to come in that area. This was not a tech week for earnings. Late next week, the week after, we'll be getting plenty of them, and that might get in the way for some potential trading opportunities. But you have to like what you've seen over in the technology sector as well. Closing at that old short-term floor. Like to see it push through that. If I'm looking for new potential trades in the sector, I just like to make sure it pushes through that. If I'm already in, that's just something I'm going to be noting, keep an eye on it, but not necessarily overly concerned about. Staples was able to finally sell me. I still don't love it. I'm definitely open to stocks in that sector, but I still don't love it. But I do respect the signals that it has generated. I did need to see it break above that 52. Even though we were seeing some bullish signals along the way, that was just something I needed to see. We were able to gap above that on the open, so maybe a little bit of a cheat, but a close above is a close above, right? And so I will take it. The flat 200 can be something to keep an eye on, but as we've talked many times before, at least for me, I'm not as worried about a flat 200 as I am a trending 200 average. And really what I'm going to be watching this old trend line, which is going to kind of line up pretty nicely with that falling 50-day moving average as the next real prominent level of resistance. Now, I do expect at some point we're going to see a pullback from it, whether it's an individual sector level or a broad market level. Well, really both, right? It's not necessarily simultaneously, but I'm pretty happy with the close here. I still don't love a lot of the charts that I looked at within this sector, although I did, find some interesting ones there, both bullish and bearish. But a nice clean close above that 52 here today, which was a pretty major price point. I know I was a little more afraid of it than other traders, for better or worse, but cleanly breaking above that. Utilities, we did take a run at that swing. We weren't able to push through that, at least here today. I did want to find at least one utility stock to follow next week, whereas last week I didn't even follow a utility stock because I figured there was nothing they could do to get me on board. If this breaks, I'm going to call that a buy signal, and realistically up into the 54 range, I don't see any reason why we're not working into that 50-day moving average, that trend line. That will concern me as a resistance zone as we approach 54, and we still have to break. So I'm not going to be surprised at all if we're talking on Tuesday and we've been knocked it down, and that would be my bet if I had to bet. But we are right knocking on the door of that resistance. It could theoretically happen as early as the next trading day if it wanted to. So I do think that would be a tradable signal, a break above that. I will be keeping, I'm not going to have a very aggressive outlook, I guess, if that does break out. I am a wimp, and I look at that trend line, and I expect that to be a level of resistance. That is a potential entry from a bearish point of view, in my opinion. So I would not want to be a bull when I got there, right? Whether I'm a bear or not, I wouldn't want to be a bull. But there's some room. I mean, there is some room to operate between the theoretical break and that, at least for me, that challenge that would scare me completely out of the sector from a bullish point of view. Over in healthcare, they, of course, they broke that 89 yesterday, weren't able to close that 50-period moving average, built off of that momentum here today, an area that I like, although we do have lots of healthcare earnings next week. Most of the stocks I found for setups next week in the sector had earnings next week. And so again, this might look like one of those weeks where if I want to trade into the, sector, it would probably more likely be the ETF than the individual stock to offset that risk. It's unlikely that XLV or any ETF is going to gap down or up, depending on which side I'm on, 15% on earnings. Whereas an individual stock, that stuff can certainly happen. That's one of my favorite things from a trading point of view about these ETFs. I love them first and foremost as tracking mechanisms to kind of help me process what I'm thinking about, the market, the different areas. But I don't hold swing trades through earnings. I never will. But I'm seeing some interesting setups, then there's just earnings in the way. So that is where one alternative, if we do like the sector, but those earnings are causing us some trouble. We'll see where they go. I'm really excited about next week's earnings because I love, you guys know me, healthcare is probably my favorite sector. I just like the sector, not specifically as a bull or a bear. It just depends on what the chart looks like, right? But it's just, for whatever reason, one of my favorites. I really like to follow stocks in that area. So I'm excited to see how they do on their earnings reports. But lots of those big name companies in this sector are going to be reporting here next week. Not a lot, though. Again, there's room. One thing I love about this from a purely technical point of view, and yeah, those earnings can help or can hurt depending on how it goes. There's really nothing here. A lot like the Russell Index, there's just not a lot of previous price action to act as potential support and resistance zones. We're above all the moving averages. There's no historical price action really between here and our 90, our 93 or thereabouts. Of course, this is our all-time high. We're not all that far away from that necessarily. So I really do like where this ETF, how this ETF is looking right now. I love the space that it has to potentially operate. I'll be bullish. Let me just say that, better or worse, especially as long as we're above this 89. I think you have to look at it from a bullish perspective. Break of 88, I think you probably take that off and are looking at it neutral to bearish, depending on you. But as it is for me, as long as we're above this old floor, this 50-period moving average, I'm looking at that space and I'm thinking, yeah, that's exactly what I want to see. And good afternoon, Tiago, and good afternoon, Aditya. Good to see you guys. Hope all is well and you got a nice, exciting weekend planned. Over in the discretionary, one of those times where, darn it, I wish I would have been sold yesterday because we had that nice gap. Yesterday was kind of on the fence and I wasn't ready to call it a clean break. I needed I needed a little more movement. But I do think we can say that we've, taken out that trend. We clearly have bullish momentum. We now know where our swing support is. We, at least in my mind, this should not go below 103 here. And as long as we stay above that, that is an area that I am open to from a bullish perspective. A lot of little things between here and, as far as resistance goes, we have 108, an old price line, and the 200, period moving average. We're going to debate the recap gang and MRC for a bit. We'll call ourselves whatever. We might just change our names depending on the day. We can be crazy over here in the market recap. No one's around watching us, so yeah, we could go with we can call ourselves whatever we want because no one's here to stop us. But lots of little things in the discretionary sector, and still, not a ton of earnings. I mean, there will be some, but they'll kind of be starting to trickle in a little bit more in February. So 108, which is our old price level, and the flat 200, 110, 112. So we kind of have about $2 intervals that will kind of work from one level to another challenge. Right now, this old resistance point, I do think we can call that our primary level of support. For me, as long as we stay above 103, though, that is how I will be. Overall, I think this is, again, a bullish sector. And so, again, you kind of see those challenges, and whether, in hindsight, I shouldn't have been afraid of this trend line or the trend line in tech or the trend line in materials. At least they were there and you could understand where I was coming from, right? You might have called me a wimp and you probably would have been right, but you probably at least understood where I'm coming from. Today, we're looking at things and there's just not those same arguments anymore. And that's where we find ourselves. Over in real estate, kind of a weird day. We didn't really do, a whole heck of a lot in there. Did push up a little bit further, closing above the 50-period moving average, this old price line in here. I don't love the sector, but I do love the fact that there's really not a lot of resistance for a little ways before we go. In the 3350, probably would call that kind of that next level to be kind of looking at. That was kind of a floor, so somewhere in the general vicinity of 3350 as the next level of resistance to be looking at for me. Not a lot between here and there, though. It's just, I think maybe part of it is The ones that look good to me are very extended breakout type of candidates. I'd love to see it consolidate or pull back and then run. It's just not an area that I love the way the individual charts are looking today. That can, and of course, will change. And yeah, thanks, Andy. I was giving Marie the credit. She deserves credit. She's awesome. But I was giving her the credit for your recap game yesterday. So, and I didn't catch the comment until everyone was gone. So good call over there. So room to run again. A lot of these things are pretty extended. And that's something we do want to keep in perspective, right? It's see bullish signals, you're going to sound bullish. You just don't want to go crazy ever, right? No matter what you're seeing in the market. And last but not least, for me, nothing. We dojied right at that trend line. My trend line, yours might be broke already. I understand that. Mine's not. We dojied over in the communication services at my trend line. I would understand if you looked at it through bullish eyes, but I'm just not quite comfortable saying that yet. I'm not necessarily bearish, until I see some downward movement off of that, but I'm not ready to go bullish until that thing is cleanly broken. And I have plenty of things. You're going to have plenty of things, whether you don't like the healthcare sector as much as me, but you love communicating. I mean, we're going to have options. We're not going to be trading everything, right? So, that's always, what I primarily hope you guys get out of this market recap. I hope for the most part you agree with my technical analysis, because if you don't, I'm probably doing something terribly wrong. But you don't have to agree with my posture on everything, and you probably don't always do that. So you probably don't. So exactly, Marie, exactly. So yeah, I mean, I can easily be swayed on this, Zach. I'm just not there yet. And again, I understand that's just me. Not everyone is going to agree with that, and that's cool. I'm fine with that. I always want people to be trading what they're seeing, what they're feeling. Me, I'm just a wimp. I'm not comfortable. These guys have never done enough to get me on board, and it's just going to be tough. They have to earn my trust, and they just haven't done that yet. But I do understand the bullish argument. You've seen some nice movement in Facebook and Google and things like that. So. This one will be fun to follow for me next week. Just still not ready to be on board with it. So as you can see, I mean, kind of sound like a broken record, but, and again, I'd love to get your take. Where are the bearish signals? It's not that they can't and won't develop, but where are they today? I'm just not seeing them personally. I anticipate that a lot of my bearish candidates going into next week, because you always want to have candidates on both sides, right? It's just when you think that all signs are bullish that you sell off and need some bearish candidates. I suspect a lot of mine are going to be bearish breakdown candidates, things like Urban, just as an example, just off the top of my head, that have a, very, established floor. If we have a bullish week, good chance that that's not even going to be tested, much less broken. But if we do start to see some selling, and then, I see this floor, not specifically on Urban, that's up for all of us to decide. But this is probably the type of bearish setup I expect to be having in my watch list if we do see some selling next week. So many of the retracements that were looking nice, early last week and maybe even early this week, some of them are still going to be intact, but a lot of them are just going to be showing those signs of bullish momentum that are going to kind of scare me off. So I suspect it's a, bearish breakdown, which is my favorite setup anyway. So I'm good with that. Who doesn't love a good retracement? But I really do. I love things that have clear floors, clear ceilings, take a while, and then break them. That will always be my favorite directional trading setup, I imagine. I know it is today. So as we kind of shift gears over to the volatility index, really not a whole lot to see here. We continue to drift down a little bit as, just fear has kind of subsided. I'm not willing to say it can't come back into the market, but it's getting easier and easier for bulls to have faith, and it's getting easier and easier for bears to say, you know what, I've been watching this for a bearish retracement for 2 weeks. I give up. See you later, right? And so, no surprise the VIX is seeing a little bit of downward movement because of that. Dollar index working back into that old range. I think you have to kind of shift gears. When we were below that, I thought the right way to look at it was neutral with a side of bearish. I think the way to look at it right now is neutral with a side of bullish. Overall, I still think it is primarily neutral, but with the price action that we're seeing, I wasn't ready to say it yesterday, and I'm not really on, going to plan on doing anything about it. But I think just as you look at the technicals on the chart, we've created that, higher high. We're back in the range. We're seeing that 9. We're above the 9. We're above the 20 or those short-term averages. We're seeing the short-term 9 EMA swing back to the upside. Whereas 3 days ago, looking at it as a retracement, I thought made a lot of sense, to me at least. Today, I don't really feel that way. And as long as we kind of hold within this range, I'm going to continue to feel pretty much the same way. And that's okay. It's okay. I'm never unhappy to see the dollar move. Over in metal, we did see some movement. Right now, as we speak, we're actually hanging out at 1280 on the gold contract. Never really generating any buy signals off of that price. We've started to try to, we did bounce off of it briefly, but we never really got any momentum off of that 1280 zone. We know that's kind of an old support level. We've seen some movement off of it. Not really generating any buy signals off of that price point just yet. So yeah, I'm good with the neutral. I'm good with neutral. Absolutely, Zach, no doubt. As you can kind of see on the hourly chart here on the dollar, this has been a respectable support level. We've worked into it before, sometimes uglier than others, and we've held. Don't think we're seeing any signals yet, and we may or may not get them. But I do think as we work into, into next week, if we continue to hold on this floor, that could theoretically be an opening for us. If this floor gives out, I think you have to take a little bit of a cautious approach and let a true pullback develop. Because is it 1260? Is it 1270? I don't know. As long as we're kind of above here, I mean, we are seeing that 50 crossing above the 200, a very nice technical signal. But short term, if we break this floor, again, I'm not saying I'm going bearish because I am not. But I do think you have to, so let's let it pull back or simmer for a little bit. I don't think you can just buy at 1277 because it's gold or whatever. If we do give out on this floor, at least that's how I will be looking at it. Overall, I still remain bullish, and like I said, I'm not going bearish. But if I'm looking for new entries or potential, selling a call against my call on GLD or whatever it might be, a break of that 1280 might be a place where I'd start to be thinking about that if I haven't done so already. No surprise. I mean, 13 is it's going to be a tough cookie to crack, and it's already developed into that. We have been watching for it. Most of us here at Tackle Trading have been watching for it to break, and I think that is the smart thing to do. But it's also easy sometimes to forget that because you're watching for it to break doesn't mean it's going to break, right? So we're not really seeing signals, but if we break the floor on gold, we're going to start to see, we've already closed below the 9, we're closed below the 20. If we break that floor, that 9 is going to be sitting on top of it. It's just those very little subtle sell signals that, again, we haven't broke yet, right? So let's not assume anything, but I do think if that happens, again, they're going to be subtle. They're not going to be enough to change my overall posture. But I do think I'll look at them as some short-term sell signals if we do that. So yeah, I mean, there's just room to go, and that's the thing. And I don't know, anywhere in there would make sense to me, Zach and Marie. Anywhere between 1260, above 1260, or even a little, even as low as the 50-day moving average or the 200-day moving average, where we had our breakout point, in the 1250s. That anywhere in there would make sense. It just will have to develop in real time. I don't know where to eyeball it because we move so quickly and there's not a lot of history from a price action perspective. I think we just want to be cautious if that falters in existing trades or looking to create new trades. Ultimately, follow your rules and your design. Never take my word for anything, but hopefully that can give you some ideas as you move forward. Silver a little weaker. We gave out on that floor. We breached it on Wednesday. We closed below it yesterday. We've worked back into this old support zone. I'm going to call it 15 and a quarter. Personally, that's puts us about that. Just around that 200 period moving average. This old floor is it is definitely a zone. And so again, I don't think you look at this necessarily from a bearish point of view, but I do think you have to kind of put on those. Yeah, we're seeing some signals, like it or not. And if you're some of us here, I imagine we have some bullish situations going on in silver. You don't necessarily love that you see some sell signals, but you probably have to respect them. Again, I don't think this is something that's going to concern me. That's not enough to get me to jump off of, I like the metals. I haven't seen that personally yet. But I do think, the selling that we saw today is not how I wanted it to play out, especially as fast as it went. And in some ways it makes sense. We broke a little floor on silver. On the other hand, would like to see it try to catch. But again, this is the problem. This is why I always think in terms of space. There just was nothing there to prop it up. Once that little floor gave out on us, there wasn't anything until we worked into those moving averages. Nothing really to prop it up, to develop, to prop it up. So we'll see where we go here next week. But some very subtle, in my opinion, at least, sell signals starting to generate over there. I'm not looking at them as long-term things as of right now, but definitely a little bit of weakness today. I think you have to, have to say. Over in natural gas, and speaking of hilarious floors, we took out that little floor. We're still in that range. We made it all week long in the same range on natural gas. So there's that. It was a wild ride. We did take out that, on the intraday, of course, and saw some pretty steep selling into the hourly 200 period moving average, where we kind of reversed and of course, closing back within that trading range. I'd like to see it stay in this range. I don't have any hopes of that. I fully expect that it's gapping up or down when we open up for next week. But we did spend the whole week, we finished the week in the same trading range that we started it. So there is that. I still don't see a great technical trading opportunity here. And as I said before, even if I did, I need at least 1 week of not a huge gap on the open before I'm comfortable personally. Yeah, I mean, I have no idea, Zach. I really don't. I don't. If I had to say, I'd probably lean to the upside. But with natural gas, I mean, it's either going to be cold or not cold enough, and we're going to likely gap on the open going into next week. That may or may not be a huge gap, and it's fine that it gaps. That's kind of what it tends to do. But these big gaps have been very, not comfortable for me. So right now, I would really like to see it develop into a range here. And again, I don't know. I mean, I could see an argument to buy around 370. That would be a break of the little weekly range that we put in. I could see an argument to sell on a close of this little floor that we put in, say 325 or thereabouts. Now, I don't think that it's going to line up to anything I would trade at those prices, to be quite honest with you. I don't know is probably the best answer. I don't anticipate doing anything, but I think the 370 and the 330, 325 ranges are kind of those short-term floors and ceilings that we're working with. If we can stay in this range and simmer down a little bit, then I'd feel a lot better about potentially going long if we broke to the upside, or short if we broke to the downside. Whatever it does next, it is going to be doing without me, unless it goes sideways for a while and simmers down this really gappy behavior. That's way too gappy for me. I am way too big of a wimp to sleep at night with that type of price action. So, again, that's just me. You may, you probably aren't as wimpy as me. As we wrap up looking here at our crude oil, we did kind of take out that little intraday resistance level. Zach, we'll pop over to UNG here in just a moment. But we did take out our intraday resistance. Saw some nice movement. We are approaching, a fairly respectable resistance level in my mind at that approximately $55. As I've said many times before, and we'll probably say again, I think it's a bullish signal above 55. I still think it's a bearish signal below 50. And I still think that unless you're day trading, it's a very difficult thing to trade in between. And so my numbers have not changed, and probably won't until we broke through that one way or the other. But definitely some good solid movement over in the crude. It looks like it wants to take a run at 55. Will it win? Well, it's not, just a given that it's going to. That should be a little bit of a fight. I would expect it to be, at least. But it does look like it's going to get a chance to test that zone. Hey, the last time we tested, we knew 50 was a potential battle zone for it, and it won that fight. right? We are seeing, again, we're seeing some signs. We've got back above the 9. Our 9's now rising. Our 20 is kind of flipping around. We've been able to break some resistance, been able to put in a higher low. So we are seeing those, those turnaround type of signals going on over there. 55 is a nice number, nice round number. A lot of people are looking at it. We've seen price action here before. And so for me, that's the signal. And if we take that out, really, there's not a lot to work, to concern me until we get to that long-term trend line. And again, much like the utility sector, we get there, I'm going to look at it. I'm not going to be a bull, at least in the short term. It's going to have to get through that without me. Because that is something that always will scare me off. But there's some room, right? That's $3.50 before we challenge that. Again, let's not assume we're going to break 55. Good chance that we don't. But we are again seeing some momentum in there, and it looks like it's going to get a chance. It's going to get a chance to test that out potentially. Over on UNG here, of course, Zach, this is going to kind of track that natural gas commodity. This is going to, of course, really be very similar. And for me, again, just for me, I'm going to treat it the same way as I'm going to treat natural gas, the commodity or the futures contract. I still don't think this is an area that I'm at least comfortable trading if I'm thinking it from a potential entry point of view, basically using the same kind of thought process we were on natural gas, where we kind of put in this little weekly range, right? I know candles look a little bit different, but the price action is designed to be the same. A break to the upside, I would consider that a bullish signal. Whether or not that'd be enough for me to trade, I don't know. I don't think so, to be honest with you, but I would call it a bullish signal. A close below this floor, I would call a bearish signal. Yeah, and we've been watching that for a while. It's been a very volatile commodity lately. Very appealing to the intraday traders because of that day-to-day and intraday volatility. Kind of a difficult area for swing traders. The last trade I really liked on natural gas was the break right back here. And, at least I wasn't able to do anything about it because we had a pretty nice gap to the upside. But, this is where we went sideways for a while. Let's go back to our commodity here. We went into a nice sideways range. This is what I want to see happen in here, and then break to the upside. The problem wasn't that there was an identifiable signal, in my opinion. It was that it gapped. And once that happened, once that started, we've developed a really volatile, gappy personality, which is difficult, in my opinion, or at least difficult for me as a trader. And if you scare me, I'm not afraid to hide from you. You got to, I'm not afraid to run and hide and say natural gas is not for me today. It will be eventually, right? Is it in the near future? I don't know. If we do develop a nice 3-week trading range like this and then break one way or another, yeah, I could see myself liking that. I'm not going to hold my breath that that's going to happen, though. So, we'll see where it goes. But one of these days, and this is why I'll look at it, every day next week and every day the week after, one of these days, I'm going to like what I see, and it'll be worth it because it's kind of fun to follow along anyway. I need to follow along anyway. So, and eventually every one of these charts that we go through will look just like I want it, just like you want it. Maybe it doesn't today. Maybe it won't for weeks or months or a long, long time, but everything will give us an opportunity if we stay on top of it. So, ladies and gentlemen, that's going to do us for the week. I guess this will be a short week coming in. We will be closed in the market on Monday for Martin Luther King Jr. Day. So I will not see you on Monday, but we'll pick up ready to rock and roll on Tuesday, business as usual. As always, guys, it is certainly my pleasure, and I do appreciate everybody's time. It's great to see the recap gang hanging out with me, and it's not so lonely in my office while I'm going through my routine. So I appreciate you guys quite a bit. Thanks for hanging in there with me. Have a great weekend, both in and out of the market. No, we'll be closed on Monday for the holiday, Thiago, so we'll pick back up on Tuesday. I know the chat's a little bit behind me, so so sometimes I don't catch that. But yeah, so we'll get a theta Monday, and then we'll pick back up and get ready to rock and roll here on Tuesday. Have a nice 3-day weekend. Enjoy that extra time with your friends and family. and your watch list, right? A little extra time with your watch list as well. So be sure to get through the scouting reports as they get to you on Saturday. But of course, make sure you're spending time doing the things that you love with the people that you love. That's one great thing about trading, right? Gives us time to do other things. So thank you so much, ladies and gentlemen. If you're new around here or this is your first time, be sure to subscribe to the channel and hit that notification bell so you can be alerted to any new videos or live streams that we're doing over here. And if you do the Twitter thing, be sure to join us over at Tackle Trading on Twitter as well. If you need added to the list, the Team Tackle list, just hit me up on Twitter, or you can hit us up over at Tackle Trading too, and I will get you taken care of and added to the list. I think we're making progress over there. If you enjoyed the market recap, it's always helpful and appreciated if you do give it a thumbs up, just so we know it is helpful and YouTube knows it's helpful as well. And with that, ladies and gentlemen, get out of here. Have a wonderful Friday afternoon, a great 3-day weekend. Be ready to rock and roll on Tuesday morning. I'll see you on Tuesday afternoon. Thanks, everybody. Happy trading.